Where will gold prices be this summer? Will they fall or just continue to power through? That will be our topic for today's video. Hi, and welcome to Minuteman Precious Metals, where it's my goal to enhance your financial preparation and prosperity by tracking my personal stacking adventure. Today is April 27th, 2024. I really appreciate all the support my channel has recently received. I would really like to build from that momentum. So if you enjoyed today's content, please like, share, and subscribe. Let's get after it. This chart represents gold's climb this year. It's currently up 13.45%, and many stackers are happy about that. But we wouldn't mind a further pullback before adding to our positions. This week's pullback offered attentive investors the opportunity to buy gold intraday below the 2300 mark. So where do analysts see gold prices going in the near term and the longer term? Is there the possibility of further price drops this summer? In the longer term, analysts see gold's bull market continuing. Goldman Sachs, JP Morgan, and Citibank all see gold reaching $2,500 per ounce at some point this year. That nexus point seems to be a distinct possibility based on my research. By the way, links to all the articles that I used for this video will be linked in the description. To provide some direction on where gold prices may be this summer, let's analyze historic data and recent expert analysis. When we review this chart on the annual price patterns of gold, my American viewers should focus on the blue lines each month, and my viewers in the UK should focus on the orange line. Historically, we can see that May provides modest gains for gold. Then in June, gold prices have seen modest percentage drops prior to amping up again in July. Industry analysts see this historical summer gold price downturn this year as well. Citibank sees increased prospects for a pullback in prices around May or June, but expects strong buying support at the $2,200 threshold. Other analysts also warn that gold prices still have further to fall as focus returns to U.S. monetary policy and shifting expectations that the Federal Reserve will maintain its aggressive monetary policy longer than expected. According to the CME FedWatch tool, markets see our first real chance at a rate cut in September, with a 45.6% chance that the U.S. Central Bank will lower its bench rate by 1/4 of a point. Ricardo Evangelista, senior analyst at Active Trades, in a note Monday said gold finds itself ensnared in a balancing act between the flight to safety on the one hand and the rise in treasury yields and a strengthening dollar on the other. With tensions in the Middle East showing signs of easing, the market's attention has shifted towards assessing the resilience of the U.S. economy and the persistent grip of inflation. As prospects for a near-term rate cut by the Federal Reserve diminish, and optimism grows regarding the avoidance of an overt conflict between Israel and Iran, gold prices could be poised for a correction, as traders may start closing long positions and capitalizing on the profits accrued over the past month. Although gold has room to fall further, analysts have said that the factors that drove its March breakout rally remain in place. Central banks continue to buy as a safe haven asset to hedge against rising debt levels and as a hedge against the U.S. dollar. At the same time, Asian investors still dominate the marketplace as they continue to diversify their portfolios. David Morrison, senior market analyst at Trade Nation, said that he also sees potential for gold prices to move lower, but pointed out that the previous corrections have proven to be a good buying opportunity. When precious metals experience the type of gains they've seen over the last 10 weeks, sell-offs can be deep, but also quite short-lived. Despite this, both silver and gold are still long ways above any significant levels of support. He questioned if gold will backfill and retest or just power on regardless. We'll have to wait and see what happens. In my mind, in the near term, I see gold as a chair standing on 4 legs, but with 2 legs cut down by several inches. Geopolitical factors and near-term rate cuts may cause the gold markets to rock a bit. Remember, I'm not a financial advisor. This is just my own research to better invest my own hard-earned fiat dollars into real money. Based on my research, analysts who are looking for further pullbacks see them in May or June. Of course, they don't agree on where the bottom might be, but the range appears to be a low of $2,150 and a high of $2,255 before building more upside momentum. I personally bought during this week's pullback into the 2,280 range, but plan to wait until further consolidation before making any more major purchases. For me, a 1 ounce coin is a major purchase. I will be unboxing that purchase in an upcoming video. Let's call it there. Thank you for watching, and remember, time is your most valuable asset, and I appreciate you sharing yours with me. Minuteman 6 signing off.